Well, let's move over to Kenya and check in on how the markets have fared for the day. Looking at the overall blue chip index, down by 0.6%, 4,477 points. You're looking at the likes of Total gaining the most on the day, settling at 15 shillings 40. It was up a rally there of 10%, and Ray Pingo falling back by 3.6% on the day, making it one of the top losers. You also had Kenyan also slipping back by 5.6%. So you're seeing the market under pressure. You're also seeing the currency under pressure. Just looking at how it's trading against the dollar, 87.4 as it stands. It has slightly gained an afternoon trade, but it has been above this 87 level, and many saying it could weaken from here on out. But let's delve into these issues now. We're crossing over to Nairobi to get an update on the markets. Kenneth Minjire, fixed income and money markets analyst at Stanlib Kenya, is standing by. Kenneth, thanks for joining us today. So just looking at the overall market right now in Kenya, if you're looking at the equity market, it's weakening. There are concerns around weakening in the currency. Would you say that you're starting to see more risk aversion creep into the markets right now?
I think I wouldn't go as far as to call it risk aversion. Basically, what we're seeing is investors are holding off in anticipation of the upcoming elections, which are about a week away. We haven't seen any major sell-offs. What we've seen is basically volumes on the exchange have decreased, and as you know, as our market is mostly driven by volume. So when you see a drop in volumes, you'll obviously see prices start to come off, and this will affect the index. But we haven't seen any major sell-offs. We've seen a bit of profit taking after the results that came out in the past week. But as to risk aversion and large sell-offs, no, we haven't seen any of this.
What do you make of the resignation of East African Breweries CEO stepping away just only 8 months after taking up the position?
I think it will actually on the share. I mean, there'll be an effect on the share price, considering that EABL is one of the heaviest foreign trading stocks on the Nairobi Stock Exchange. It has heavy foreign participation. So with announcements such as these, we see that foreign investors actually sit up and react to such announcements. Local investors rarely do make any major moves based on board changes or CEOs being appointed or resigning. I mean, historically, we've not seen much of an effect from local investors, but we have seen foreign investors actually take a seat and sit up and look what's going on. And after the results we saw released in the past week, which were as expected, they weren't as strong. I wouldn't want to speculate, but I think maybe this could have something to do with it.
Yeah. Of course, those results showed almost 15% drop there in net income. But let's turn our attention to the fixed income side of the market, looking at the 91-day T-bills. Those yields there rising to 8.928%. That's a tick up there from just over 8.2%. What is the signal right now? Are you expecting yields to continue to rise?
Yes, actually, most people were actually surprised by the 70 basis point move. But if you actually look at the whole money market, the short end of the money market as a whole, you'll actually realize what's happening is we're seeing a convergence. The T-bill had lagged somewhat because we've seen the overnight has risen to levels above 10%. Repo is currently at about 9.4%. So what we're seeing is basically a convergence. The 91-day T-bill is expected to continue moving up. We may see it slow down as it creeps closer to levels of about, I'd say, between 9.5 and 10%. It may slow down. But generally, I don't think the market really foresaw this rise. At the beginning of the year, we expected rates to basically drop off due to heavy maturities and trade flat as we moved towards the elections. But I think what we've seen as CBK has come into the market to protect the shilling by mopping up liquidity. What we've seen is the rates have started rising, reacting to this, especially the repo, which I think has had an influence on the other rates at the short end of the curve. So, I mean, I think the thing is to watch the shilling as we move closer to the elections and even after. Basically, CBK has proved they'll be looking. The priority is actually the shilling, so they'll be looking to protect this.
What are your views on the target level that they would be looking at right now, and at what level they would aggressively come into the market to try and halt any depreciation?
I think we would see, I think from what we've seen, the shilling creeps closer to 88. They come in quite aggressively, mopping up shillings, and also at the same time selling off dollars, which is so anything 88 and above, I think probably makes central bank quite nervous.
And of course, heading towards that 88 level as it stands right now. Just going back to the market, we've got 15 billion shillings in the T-bill market, treasury bills being auctioned next week. If you're looking at yields starting to continue to rise from here on out, what type of support do you think will come through for that?
Yes, of course. I think what you'll see, of course, investors will price in the demand for liquidity into the T-bill rates. So we expect this will still move up. CBK may try to control the rise, but if you look closely, I think probably at the market average, that will signal the effect and what market behavior is where market behavior actually is. And we expect market average will be quite high in the next election. And basically, I think, as I mentioned, just look at the shilling. As long as the shilling looks like it's getting weaker, we expect rates will continue to move up. Yep. If the shilling gains, we expect probably that the rates may come off.
Just going back to demand right now and appetite for debt ahead of the election, the results of the 15-year paper, that auction that was held recently, have come through. What type of demand did you see for that?
Those two papers, the 2-year and the 15-year paper. The 2-year saw heavy subscriptions. About 35 billion came through looking to pick this paper. CBK only picked about 20 billion. On the 15-year, we saw subscriptions of about 9 billion, with the central bank only accepting 4 out of the 9 billion. So those were quite, I mean, the subscriptions were quite heavy, but also what we saw is the central bank matched the upcoming maturities that are expected next week, and what they picked from the market, because it was actually about 25 billion both ways. Basically, and I mean, the rates rose up. We haven't seen much secondary activity on these two papers. And I think because of the nervousness in the market and the market basically looking for direction, we don't expect a lot of secondary market activity on these papers in the short term.